Welcome to How I Got My Start in Finance. This week, author of The Macro Tourist, Kevin Muir, talks to Tony Greer about his exposure to finance at an early age. Growing up hearing about the stock market at dinner, he tells Real Vision how that set the table for a career in finance.
Well, so I grew up in a household where my father was a research director for a kind of an equity shop in Canada. So I grew up listening to a lot of stock market talk at the table. And when you combine that with my love of games, like even he said from the time I was a little kid, I would come up and want to play games and games and games. I kind of always knew that I wanted to be a trader. My mom wanted me to be a lawyer or a doctor, and so I was a disappointment because I went off and followed in my father's footstep in the capital markets.
That is amazing. There was the same exact thing with me, where purely my father was an over-the-counter trader in equities for 30 years, and it was just dinner table conversation that made its way into your blood. Right? And so when I got out of school, I was just determined to get a job on a trading desk. What was your first practical application in the markets?
So I actually got a job just like you. I didn't even finish school, to be truthful. I was at University of Toronto and I started to get a job at a discount stock brokerage division. And next thing I knew, I was the manager of that, and I was rearranging my school so I go at night. And then I actually had a brief stint where I tried Chicago. I went and I decided I wanted to be kind of a open outcry trader, and I realized that wasn't for me. And I came back to Canada and I kind of put together all my skills, and I realized that what I really wanted to do was work on an institutional equity desk. So I applied, and I was lucky enough to get a job at RBC Dominion Securities on the institutional equity desk, even before I'd finished my degree. I eventually got it at night. So for anybody, my kids, if you're listening, make sure you finish your degree. But I did get it.
Educated man. That's
right.
Sure.
I did get it at night. But I was lucky enough to get a job in the early '90s at RBC Dominion Securities, and RBC was just a magical place. It was terrific. I got to sit with some really smart traders that I got to learn from, and it was unbelievable, great learning experience. What was really good about RBC was that they let you go with it. Like they didn't care if you were young. They didn't care if you had new ideas. If they thought you could make money, and they gave you responsibility. And so before long, even though I was young, I was handling all the risk for the equity derivative book. And so I did that in the 90s. And then in late 99, my wife got pregnant, and then we had our first daughter, and she was born with a heart defect, and it was fixed at birth, and it was very emotional time for me. And I realized I kind of had one of those moments where I realized what was important in life.
Yeah.
And even though I loved RBC, it was kind of I'd hit this point where I kind of questioned what I wanted to do, and I decided that I was going to take some time off and think about it. So I quit, and I quit to spend some time with the family. And while I was thinking about what I was going to do, I decided I'd start trading my own account. And I figure, you know what? If I trade my own account for a year, I can always go get a job, somewhere else. Well, 1 year turned into 2, and 2 years turned into 5, and then next thing you know, I'd gone 20 years basically just trading my own account, and my daughter was off to university, and I realized that I hadn't had a real job in a long time. So I reached out to one of my friends at East West Investment Management that was my competitor at CIBC, and he was kind enough to take me in, and it's been great kind of getting back into the swing of things there.
What type of fund is East West Management?
So we're a portfolio manager. It's kind of a family office. That's we also kind of advise high net worth individuals and families, and it's a lot of that. And it's been terrific in terms of expanding my kind of getting out there and listening to different pitches from different fund managers has been a wonderful experience, and something that I really enjoy actually is listening to the different ideas. I've never kind of had any idea of all the different ways that you can make money in different kinds of funds out there. So it's been fascinating.
Well, clearly you found a couple of the ways if you were working for yourself for 20 years. I think it's really interesting that you said you didn't really like open outcry, and then you wound up evolving into having essentially the job of a local trader, right? Where you're trading your own money on your own for a long time.
That's correct.
Obviously, you were very astute at that and able to make it through and continue being successful.
Right.
I feel like we both came from the early 90s, what I call the Renaissance age of interdealer banking trading, right? And I'm open and honest with everybody, and I miss breaking phones. I really do. That's one part about the newsletter business that I don't get to do often. And that was like sort of the release, like, a big play on a sports field or something like that. Have you got any good phone breaking stories from those days?
You know what's interesting? You say that you like breaking phones, and that was actually the genesis of why I started writing the Macro Tourist letter, was because people used to ask me, what do you miss, not sitting on an institutional desk? And that, to me, I didn't break any phones, but I miss the camaraderie and the betting and the gambling and kind of being around and hearing the trading talk. And so I miss that. And then people asked me, what else do you miss? And I said, well, when I was at RBC and I was kind of trading for our book, we would trade size and I would be setting prices. And, so someone would say, we're going up on a couple million of something. Do you want to buy some? And I'd say, yeah, I'll buy 250 or 500. And then when I went and started trading for myself, people used to phone me up thinking I was a real shooter. And they'd be like, we're going up on a couple million. Do you want to buy any? And I said, well, I'll take 10, but I understand if you don't want to write the ticket, so I missed that. And that was one of the reasons that I kind of got out and started writing the letter, was to kind of talk to people and to kind of put something out there so that I could meet wonderful people like you. And it was terrific that way. And so now, in terms of remembering back to a story, we were the market maker for what were known as TIPS. And TIPS are not Treasury inflation protected securities in Canada. They were actually the Toronto 35 index participation units.
Oh, okay.
And in being the market maker, we were obliged to always provide markets, like post bids and offers out on the exchange. But we were also obligated to fill the trust that owned the underlying index with the index rebalances. So that means if something was going into the index, we had to sell it to them, short it to them at the close. And then if something was coming out, we had to buy it at the close. And so anyway, going to the this index rebalance, we were obligated to go and take in 5 stocks that were coming out of the index. We were supposed to buy these millions of shares and then short the stocks that were going out. Mm-hmm. And this was in early 2000. And what happened was, I don't know if you remember, but the market didn't top nicely. Like, it didn't just go straight up and then go straight down. No. And this was in, I believe it was March, and I went back and looked at the chart, and I realized that between the March, there was a 2-week period where the NASDAQ went down 15% in a week.
Wow.
So it was one of these days when I got up and we had to do this rebalance at this time. And one of the trades that I had to do was I was going to be long or short. We were putting the BlackBerry in motion, research in motion, into the index. And I was going to be short 2 or 3 million shares of BlackBerry at the closing price.
Okay.
And BlackBerry was trading at like $200, and it was a big momentum stock, and it was lots of volatility. And I woke up and on the day of the rebalance, and what had happened was the market had gapped down. So it was like the first really bad day that we had experienced in a while, and the market gapped down, and Research in Motion was down $35, like from 210 to whatever.
Yeah, 15%.
Yeah. And all of a sudden we're trading along and I'm trying to buy some, and I hear over the hoot and holler system, I hear this, a client wants to bid on 50 Research in Motion BlackBerry. And I say, okay, well, the market was like, let's say 180 to 182. And I thought, I'll bid 178 and then he'll come back at 180 and we'll go back and forth and it'll be like that. And he said, so I said, 178 bid, you're 50. And all of a sudden he said, sold. And I was like, holy smokes. And I think I lost like 2,000 on the way down. Mm-hmm. So I printed the 48, like the remaining 48, and I'm long at this price. And I'm like, what am I going to do? Like, this stock's gone no bid, and there's just like the market keeps crapping out, and I'm all of a sudden going, I know we're putting this into the index later, but right now this thing looks like it just has no bid at all.
Right.
And so all of a sudden I'm kind of trying to trade out of it. Next thing I know, I'm offside like $3 and $4, $5, and this the sales guy on the other side says, my client wants to know if your client has any more to buy. And I said to him, client?
I am the client.
Yeah. I'm like, client, that was me. And he says, oh. And then I said, well, who's your client? And there was a pause, and he said, Cap. And I looked at my buddy and I said, who's Cap? And I had no idea who Cap was. And it was Capital, Capital was a big, big client. And what these guys were notorious for was when they started selling, they sold and sold and sold and sold. Mm-hmm. And so it was like kind of like Fidelity when they started coming for, when they put in an order, it lasted weeks. So my buddy, my best friend, looks at me and he says, you're screwed. And I just had this complete shed of panic, as I was offside, and all I could imagine was him continuing to sell and the market continuing to go down, 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 down.
My hands are sweating already, by the way. I know what that feels like.
Well, what happened was, though, the market started to turn, and I kind of, I kept trading it around. I kept trying to, make a dollar and here and there, and kind of kept getting long. And I eventually bought another 50 from them, and another 50, and another 50. And by the end of the day, it was one of those emotional rallies. Like, when the market, it was down all morning, and everybody is sold, and then all of a sudden the bids come at the end of the day, and it just starts rifling up. Well, that happened. And then not only that, everyone that had to rebalance had to buy Research in Motion. So we had taken that stock, and it had gone from 210 down to 180, and then it had gone down to 160.
Oof.
And then we put it back into the index at 220.
Total reversal.
Total reversal. And we did it on size. And it was one of our best days, and it was scary and it was fun.
Yeah.
But it was definitely one of those kind of moments you never forget.
Kevin Muir marches to the beat of his own drum. From working at an institutional trading desk to trading his own account and writing a macroeconomic newsletter, Muir has had a unique path to success. For Real Vision, I'm Justine Underhill.